Hi, everybody, and welcome to the Tax Playbook YouTube channel. Before we get started today, I would like for you to like, share, and subscribe to this YouTube channel and turn on your notifications so you will get notified when I'm adding more great content for you to keep dollars in your pocket. I am Trenda CPA. I'm with the Web CPA virtual tax clinic. If you need tax help or if you're looking to start your own business, or if you got tax questions, you can always visit us at www.virtualtaxclinic.com. All right, guess what today is? Today is Valentine's Day. And I want to say to you, happy Valentine's. You see, I put my earrings on with the love on them just for you. And if nobody tells you today that they love you, I want to be the first to say I love you and I appreciate you for joining me on today. So let's get to the topic at hand today. Hey, it's another day in the tax clinic. It's a rainy day out today. I'm kind of looking out the window over there. It's a rainy day out, but it's a beautiful day because even though it's raining, I still get to meet with clients in the tax clinic, in the virtual tax clinic. So I had a couple meetings today. Those were great meetings. But as I was just kind of wrapping up to kind of wind down for today, because it's Valentine's Day and I want to spend the day with my Valentine. And so my husband and I, we have been talking about purchasing a new car. And as we were talking about that, of course, I'm being a tax person. I'm thinking about, is this something that I can write off? And if I find something that I can write off for me, I'm going to come on this channel because I want you to be in the know as well. But anyway, so this prompted me as we're looking, in the market, maybe looking for a new vehicle. I wanted to come on and tell you about this new tax deduction that started in tax year 2025. And it is a new deduction that was under the One Big Beautiful Bill. It was passed under the One Big Beautiful Bill that says effective for years 2025 through 2028. A taxpayer, an individual taxpayer, can get a deduction up to $10,000 for interest that you paid on a vehicle loan. That's right, you heard me correctly. You may be entitled to a deduction up to $10,000. So I'm here to tell you this is how you get it. These are the requirements and what you need to do. And even not so much you need to do, you may need to make sure that you make your tax professional aware if you purchased a new vehicle in 2025. So here again, it's a max deduction of up to $10,000. And it's effective for the years 2025 through 2028. Now, all vehicles are not eligible. Used cars are not eligible. You must have purchased the vehicle in 2025, and it must have been a new vehicle, not a used vehicle. Also, your car will qualify. It has certain requirements, weight requirements. Is your gross vehicle weight has to be under 14,000 pounds. And normally this is going to be, that under 14,000 pounds will be everything except your big trucks and what have you. So what vehicles that could qualify are your cars, your SUVs, your minivans, and those vehicle types. But this is the interest you pay on the vehicle loan that you must have gotten a loan in 2025. So that's the one thing, that the vehicle weight has to be under gross vehicle weight of 14,000 pounds. Then the next thing is your vehicle, the final assembly of your vehicle has to be in the United States. And you may be asking, well, how am I going to know that? I'm so glad you asked. I've done the research. Now, there's a way that you can find. There's two ways you can find out if the final assembly of your vehicle was in the United States. The first, easiest, and probably obvious way is to reach out to the dealership where you purchased the vehicle and simply just ask them. But the IRS has a way, they offer, where the federal government has offered a link where you can put your VIN number in of your vehicle, and you can it'll tell you if your vehicle's final assembly was in the United States, and therefore you could qualify for this deduction. And if you would check the link in the description for this video, I have provided you the link where you can simply take your VIN number, put it in, and see if your vehicle qualifies for this deduction, for the up to $10,000 deduction on your personal vehicle car loan. So you may be asking, what does this mean for me? So what does this mean for you? Let's just give a scenario. If you have income, let's say of $50,000 for the year. So now let's just say you meet the qualifications that you got a qualified vehicle and you had a loan where you have paid interest on the loan. Of course, the maximum deduction is $10,000, but is limited to whatever you pay. So if your interest that you paid during the year is $9,000, so the max you can get is $9,000. So it's the lesser of what you paid and the max deduction of the $10,000. Now, so let's assume your income is $50,000 and you qualify for the maximum $10,000 deduction. And what that means is, so you got $50,000 of income before the deduction, then you get this $10,000 deduction to reduce the amount of income that you pay taxes on, correct? And so therefore, your taxable income is now $40,000. $50,000 minus the $10,000. Now you're at taxable income of $40,000. So instead of paying tax on $50,000, you would pay tax on $40,000. So if you want to know what are the tax savings there, if you take the $10,000 deduction, and let's just say you're in the 10% tax bracket, and so you take that $10,000 deduction times that 10%, that's $1,000 in terms of taxes that you will get to keep, or dollars you get to keep in your pocket, because you don't have to pay taxes on that higher amount of income, because you now have this really cool tax benefit for your personal vehicle. Is that cool or what? Now, you may ask, how will I know how much interest I've paid on my vehicle loan? You have two ways of doing that. First of all, under the new provision, the lender, whomever financed your vehicle loan, they're required to give you a statement showing how much your interest is if you paid over $600 in the year for the interest. Perhaps if you don't get that statement from your lender who financed your vehicle, you can just go to your lender and just log into your account and get a detailed payment history. So your payments, when they go into to pay your loan on your vehicle, they break them out into how much to the principal and how much to the interest. So it'll be simple if you can just log into your account if you didn't get the statement from your vehicle, your loan, the company that financed your vehicle. So just wanted to make sure that you are aware of how to get that information. So if you have any questions, you can comment on this video. I'll take a look at the comments, but make sure that you are communicating with your tax professional and letting them know. If they don't ask you, they won't know to ask you unless they're, kind of up on the law, or just think about asking. But you be prepared to tell them. And if you find yourself needing help or trying to navigate all of these new tax changes, that's what we're here for in the Web CPA Virtual Tax Clinic. Visit us at www.virtualtaxclinic.com. So that's all I have for you today. I want to wish you have a happy Valentine's Day. Have an amazing day. And one of the things I want to say to you, don't be out here let them taxes be taxing you. Contact us today.